Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market, we're going to look at everything from the market all the way down through commodities. We'll check out gold, which had a bullish day today. So it was Fed day, and you wouldn't know it by looking at the daily candlestick. And it wasn't an inside bar because we did break the high of yesterday right at the end of the day by 8 cents, but not a convincing break. The bottom line is the burden of proof in this market remains on the bears, and the bears aren't proving anything. So the bulls are still looking up towards that all-time high, which is less than 1% away. So no rate cuts. The market is going to continue anticipating a potential rate cut in July, and we have a whole month to go until we get there. So now our focus is going to shift back to the G20 summit, and we're in a little bit of a mini bullish vacuum, in my opinion, because the headline risk of bearish headlines overnight is low until we get to G20. If we get to G20 and then the presidents meet of the US and China, and then we have no deal, the market will probably see a bit of a pullback in response to that. But until then, we can very easily hit all-time highs this week. So if we were to pull back and if we were to lose hourly uptrends on SPY, we'd be looking down at our base of support. The most important level for me is the low that we hit on this consolidation, and that's down at 287.82. As far as I'm concerned, as long as that level holds, that's my line in the sand that keeps the bulls in full control of this market, as long as that's support. We do have resistance at 294.34 and 294.95, and the bulls are confident. IWM, daily inside bar as well, closing up near the high of the day. If it breaks bullish, we're looking at 155.15 and then up to 156.18 as the bulls keep the uptrend in their favor. Daily uptrends are what is most important to me in any individual name, and right now most names are holding their daily higher lows. Anything for IWM above 150.167 keeps the uptrend intact. QQQ, double top the past 2 days, 187.72, 187.53. So QQQ was a daily inside bar, and we'll see which direction that breaks tomorrow. If it breaks bullish, we're looking up at resistance of 191.25, and if it breaks bearish, the bulls have to form a higher low compared to 181.94. That's the line in the sand for me on QQQ, the low from that period of healthy bullish consolidation. XLF. So a bearish reaction with a double top, 27.61. That is keeping our attention, because if we were to reject from that level and follow through and break daily support, it would be very notable. So double top, and now the most important support level is the low of that consolidation, 26.93. Break that level and the weekly chart is going to continue to tighten. We have our high, low, lower high may be set here. If we lose the daily uptrend, we'll then have to pull back and form a weekly higher low compared to 25.92. So XLF is the weakest of the major sectors. Not surprising, as the financial sector is going to respond negatively if we get rate cuts. XLV, healthcare sector exploding higher. Sideways bull flag into continuation. And the next resistance level that we're looking at, 93.45. And that actually broke by a few pennies. So now 95.92 is the next resistance level that we're looking at, with the bulls in full control. When we lose the hourly uptrend, which is easily intact, but if we lose support of 92.74 and lose the hourly uptrend, then we zoom out to the daily and we look for a daily higher low compared to the low of the previous period of consolidation. XLV has been doing a great job of leading this market higher, and on the monthly time frame, we've got a tightening range that is set to be tested here, that 93.45 level, and actually we did break it. So it's not a convincing bull break yet, but a monthly tightening range breaking bullish and looking right back to the all-time high. Biotech sector, daily inside bar. Lose the hourly uptrend here, and we'll look for some healthy consolidation. 86.59 and 86.49 are a couple support levels. So we actually did lose the hourly uptrend a bit with no follow-through, and then it was actually right before the FOMC reaction that bear break did happen. So what I'm watching is the inside bar. If that breaks bearish, we look for a daily higher low to form. If it breaks bullish, 87.87 is the resistance to be watching. The VIX here is dropping down to lower lows. 1440 did break, so we're getting this long, slow, drawn-out fade that the volatility index is famous for. After spikes, we fade. Big spike, lower high, fade, spike. We did get a higher high here. That was a bit of a difference, but here's our spike, lower high, and fade. Oil is still tight. Bullish reaction to the inventory report, but we have a double bottom essentially down at 50.59 and 50.71. And 54.80 is the key resistance. We came within 39 cents today. And if we break that level, it is a first clear daily trend change that we've seen since the 60s, the low 60s. So that would be notable, and that would only help the S&P 500 and market bulls head back to all-time highs. If we reject from 54.80 tomorrow, we'll look to stay in this tightening range probably until next week. And the weekly time frame, if we do break that pattern bullish, we will still look for a weekly lower high compared to 63.79, but again, it will be a notable shift. And if we're looking for a monthly equilibrium, which I am, the question is this our monthly high or low? And a daily trend change will increase the odds that our monthly high or low has formed and that this monthly equilibrium will continue to tighten up probably until Q4 2019. Natural gas bear break, we knew that was the most likely scenario as we had a daily trend change for the bulls with no follow through. So that's a weekly bear flag now confirming. And we're back to looking at a lack of support. There is no real support until $2 on natural gas. Bears keeping complete control. New daily resistance level 2412 will be standing out. Bears, let's see, we got the daily RSI close to oversold, the weekly RSI close to oversold, the 4-hour RSI just getting oversold. But if I'm going to have any interest in playing an oversold bounce, I'd have to see a solid flush from here to get the daily RSI and the weekly RSI in at least the mid-20s. Otherwise, no interest in looking for any bounces on natural gas. Gold bulls standing out, so the daily uptrend continues. Our new daily higher low is 1332.94. Anything above that keeps the daily uptrend intact. And we're coming up on a couple key resistances. We broke our first monthly resistance, and now the bulls want follow through to make it real convincing. 1366 and 1375 are those levels, so we're $6 and $15 away from those two resistances. Pretty much another 1.1% move, and we will be breaking all monthly resistances that have been established in the last 2 years. This is very notable for gold, and the bull miners are responding really well. GDX, we just came from a period where we had 6 days in a row with a higher low every day. We pulled back in hourly oversold conditions, gave us a daily higher low entry point, and now we have 7 days in a row with a higher low every day. So anything above 22.24 will be a daily higher low, keeping the uptrend intact. When we lose the daily uptrend, which isn't happening anytime soon, we're just going to look for a weekly higher low. The question is, can gold bulls break these two monthly resistances before losing the daily uptrend? And right now, the trend says yes, and we'll see if this momentum continues into next week. Congrats to the gold bulls, gold bulls and miner bulls doing really well. And again, this is in the face of a strong market. The dollar pulled back pretty hard today, so that only helped the gold bulls. We have a daily equilibrium shaping up on the dollar to be watching over the next couple of weeks. But this is a notable long-term pattern that's going to have us looking back up with a lack of resistance if we can get clear of these resistance levels that are right nearby. So I appreciate you watching, and we'll continue to check back in, again, fighting those trends. I know it might be hard. I know data, economic data, talking heads, all that, fundamental bears scratching their heads. Price action is king as always. And all I care about is what the price of the S&P 500 is and having a game plan where if things turn around, I know what I'm going to do. I'm not going to be a deer in the headlights and blindsided, but I'm not going to go looking for bears until the bears show themselves to me. Prove yourself. Show me some volume. Break some support levels. If that doesn't happen, it's all bulls and it's blue sky breakout. Thanks again. We'll check back in tomorrow. See you then. Another garden update. So I'm running out of room. We've got all these tendrils or whatever you want to call them going all over the place. They're climbing the windows. They're doing their thing. So they're putting out the sour gherkins, and that's what they look like when they're ready. About the size of grapes. They look like little watermelons, and they're just little cucumbers that you pop in your mouth. Tomatoes starting to put all their fruit on, bunch of different varieties. So they're all doing well. These cucumbers still doing their thing. I saw the praying mantis who lives over here earlier today, but I don't see him now. Harvested a giant zucchini off of here just a couple days ago. Hopefully it'll keep putting others out. The flowers have started, only a couple. Hopefully in a week or so there'll be a lot more of those. There's a bird friend who just caught a bug. Potato plants are starting to die off and get weak. Heavy rain yesterday knocked these guys over, so I took a scarf that I had lying around and tied them up. But that's what they're supposed to do. The plants will just die off, and then late summer harvest those. Vines still crawling for these butternut squash, and the eggplant getting fatter. Harvested a couple of these peppers already, these little spicy green guys. The green beans have been going. The snap peas, you can see there's a whole bunch more fruit. And these are great snacks. These peppers are purple. I didn't really know that a purple bell pepper existed. I don't know if they're going to change to green or what, but that'll be interesting. More zucchini plants. They're putting out their baby zucchinis. The greens are getting much bigger. Kale and collards. And that's about it. This is my temporary spot, and I'm moving in, well, I'm in the process of moving now, so I'll keep checking on these over the next 6 weeks or so. And then we get to start a whole much bigger project with a whole bunch of raised beds and all kinds of fun stuff. So, garden updates will change a bit over the next couple of months, and I look forward to sharing.